Welcome back to another Lemtcore Investing Explainer. Today, we're diving into a massive structural shift happening right now in one of the absolute best wealth preservation assets out there, gold. We're talking global macro forces colliding with huge domestic policy reforms here in Vietnam. For high net worth investors, the landscape has completely flipped over the last 12 months.
So here's the wild paradox we really need to unpack today. Global gold just touched all-time highs, right? But if you're a domestic investor holding SJC Gold, your actual returns might look totally different. The real question isn't just whether global gold is going to keep climbing, it's why Vietnam's infamous gold premium has literally collapsed from a crazy 20 to 25 million VND per tael all the way down to just 5 to 6 million VND today. Is this premium compression a massive risk to your portfolio, or is it a generational buying opportunity? Let's get into it. Here's our game plan for today. First, we'll look at the 2026 gold cycle. Second, the top 7 global catalysts. Third, we'll break down that Vietnam premium collapse. Fourth, I'll walk you through 3 different 2026 scenarios. And finally, we'll wrap up with a core investment strategy. All right, part 1, the big picture, the 2026 gold cycle. So after an absolutely massive 65% run in 2025, global gold hit an all-time high of $5,589 an ounce back in January of 2026. Right now, it's sitting in a really healthy structural consolidation phase. But make no mistake, this isn't just your standard run-of-the-mill bull market. We are watching a fundamental repricing. Gold is staying elevated for reasons way beyond normal interest rate cycles. It rises when people lose confidence in paper money, plain and simple. It's being driven by growing fears over U.S. public debt, sticky inflation, and just a general loss of faith in fiat currencies. Honestly, it's doing exactly what it's supposed to do, acting as your ultimate financial insurance. Let's break down the mechanics of how policy actually moves the price. According to some great research from PIMCO, gold essentially trades with an 18-year real duration. What that means is gold is super sensitive to real inflation-adjusted yields. The domino effect is incredibly clear here. As the Fed pivots to rate cuts, real yields drop. And when real yields drop, the opportunity cost of holding a non-yielding asset like gold goes down, which weakens the US dollar and boom, pushes gold prices higher. Moving on to part 2, the top 7 global macro catalysts. Okay, we've ranked these 7 big catalysts based on their probability and overall impact. A Fed pivot and dropping U.S. real yields are obviously huge drivers here. But I want you to look closely at numbers 4 and 5, the U.S. debt crisis and central bank buying. These aren't just temporary blips, these are massive structural shifts. Because of these combined forces, big institutional targets are staying incredibly bullish. I mean, Goldman Sachs is projecting $5,400 an ounce, while JP Morgan actually sees gold pushing somewhere between $6,000 and $6,300 by late 2026. 800 tons. That number is absolutely crucial. That's the estimated amount of gold global central banks are scooping up every single year right now. This relentless, nonstop buying to diversify away from the US dollar is the ultimate floor for the market. It's exactly why gold has kind of decoupled from those traditional real yield models we just talked about and stayed so stubbornly strong during recent pullbacks. All right, part 3. Let's talk about the disappearing Vietnam gold premium. Now, if you're investing here in Vietnam, global spot prices are literally only half the story. You have to understand this disappearing SJC Gold premium. Let's quickly walk through the timeline. Way back in 2012, Decree 24 gave the State Bank of Vietnam a total monopoly on gold bar production, making SJC the only national brand. Over a decade of huge demand and tightly restricted supply created this massive bottleneck. By late 2024 and early 2025, that sheer scarcity drove the SJC premium to a wild 20 to 25 million VND per tael over the global price. But then, everything changed. Decree 232/2025 hit late in the year, effectively killing the state monopoly and opening the market to qualified enterprises and banks. And the speed of that premium collapse was just staggering. From that massive peak of 25 million VND, aggressive state bank intervention and the news of Decree 232 basically crashed the premium to under 1 million VND by early 2025. Now, today, in mid-2026, as these new supply chains finally find their footing, the premium has stabilized at a much more rational 4 to 6 million VND. But here's the thing. Decree 232 wasn't just about adding supply. It was a total overhaul for transparency. To even produce bullion now, enterprises need 1,000 billion VND in capital, and banks need 50,000 billion. And more importantly for retail investors, the decree actually mandates bank transfers for any transaction over 20 million VND.
Plus, it requires real-time e-invoicing tied straight to the tax database. So yeah, the old days of using shadow cash to quietly hoard physical gold, those days are officially over. So the most crucial takeaway for domestic investors is this. You could have been totally right about the global gold rally hitting $5,500. But if you bought SJC Gold when that local premium was sitting at 25 million VND, your actual domestic returns would have gotten completely crushed as that premium collapsed down to 5 million. Which brings us to part 4, 3 price scenarios for 2026. So given this crazy mix of global macro events and domestic policy shifts, how exactly should we position ourselves for the next 6 to 12 months? Well, in our base case, the Fed cuts rates slowly, the US dollar kind of moves sideways, and global gold hovers between $4.4 and $4.9 thousand. That puts SJC between 150 and 165 million VND. Now, in the bull case, say we get a really aggressive Fed pivot, a US recession, or some major geopolitical escalation, real yields will tank. Global gold could easily target the $6,000 mark, pushing SJC up toward 190 million VND. But we have to look at the bear case, too. If the Fed stays hawkish and real yields actually go up, gold could correct back down to $3,800. And in that scenario, domestic investors get hit twice, falling global spot prices plus a premium that just keeps shrinking, which could drag SJC all the way down to the 130 million VND range. Finally, part 5, core wealth management strategy. So how do we actually trade this? The single biggest decision for high net worth individuals in Vietnam right now is choosing between SJC bullion and 99.99 gold rings. SJC is still the ultimate systemic hedge, sure, but as we just saw, it carries some massive regulatory and premium compression risks. Gold rings, on the other hand, track global spot prices much more closely. If you're looking for pure exposure to those global macro catalysts we talked about, without all the regulatory headaches of the SJC premium, gold rings are really becoming the go-to asset class. Okay, let's do a quick recap of everything we covered today. Global gold is riding high on 7 structural catalysts, with central bank buying and real yields doing the heavy lifting. We're tracking 3 clear scenarios for the months ahead while balancing 5 major risks, especially a hawkish Fed and that domestic premium compression. So, our top 3 VIP insights for you. First, whatever you do, don't FOMO buy when premiums spike. Second, keep a close eye on US real yields. And third, diversify those allocations. In this transitional regulatory phase, you really might want to favor gold rings over bullion. I want to leave you with this one final thought. In the current cycle, the most important variable isn't just the global gold price hitting new highs. It's the speed at which Vietnam's gold premium is disappearing. Don't just stare at the quoted price on the screen. You've got to understand the machinery working beneath it. To stay ahead of real yields, the US dollar, and these massive domestic policy shifts, make sure you keep following Leaped Core Investing. Thanks so much for tuning into this explainer, and we will catch you in the next one.